Way too many traders make the giant mistake of just looking for the next best stock to trade. This strategy ends up losing a lot of money over long periods of time and ends up causing a lot of unnecessary stress. And if this is you right now, that's okay, but this video is going to have the goal of stopping that pattern. In this video, we're going to look at some key lessons from some of the best trading institutions in the entire world, and we're also going to go over a couple key points you really need to know going forward to hopefully make your trading account as consistent and as profitable as possible on just a week-by-week basis. So let's get right into it. And before we get into the very technical details of this video, I want to propose a very simple and relatable example. I want you to try and picture a truly successful business, like not just a successful business, but like a business that's like truly successful that only offers one product. Or actually, even better yet, think of a restaurant, but a truly successful restaurant. Try and think of one that just has one item on their menu. You probably can't think of anyone. You know, there might be a couple sprinkled in here and there, but for the most part, no businesses or restaurants operate like that because the owners would just be taking on a giant and just unnecessary risk where it just doesn't make sense. And while that's obvious in like a business or restaurant world, a lot of traders actually make this same exact mistake, but by trading. And I'll explain a little bit more. A lot of traders just go throughout their trading career, just deploying one strategy, whether that be day trading or swing trading or whatever, or even if they get more specific into maybe they only trade, oversold setups, maybe they only trade breakouts or whatever the case may be, but the main point is still there. Just like a restaurant manager would be taking on would just be taking an unnecessary risk and just making a stupid decision by only having one item on their menu, traders take on unnecessary risks and make stupid decisions by only having one trading strategy. Because at the end of the day, sometimes in life, and especially in the stock market, you can do everything right and still lose. And that's just how life is sometimes, and it sucks. But there are key things that we can do, especially as traders, to help maximize the chance that we could be, turn profitable as much as possible. So this video is going to be very important from the very beginning all the way to the end. Make sure to stick around because we have some important things to go over. So now I want to dive a little bit deeper into what truly differentiates the noob traders from the somewhat successful traders from the elite traders. Most noob traders are people who have not, found true consistency yet, or just looking for, the next best stock or breakout or whatever the case may be, and they just go looking, especially for very short-term setups. Sometimes it works, sometimes they get lucky, but over long periods of time, the strategy is just not consistent enough, right? And then you have like the next level of trader who, might be a little bit more advanced, might have a little bit more experience, might have a little bit more advanced strategies where they're doing some like oversold setups. Maybe they're selling some put options. Maybe they are, just have a nice mix of some strategies working and, overall it works, but it's not as consistent as they might like. And then you have that like top tier style of trader, like hedge fund style traders, or even, like some notable firms like, JP Morgan or Goldman Sachs or any top firms like that. And what they do is night and day from people who are just starting, obviously, right? But I want to talk more about what they actually do. So I was actually looking through some boring data, to say the least. I was looking through a 2012 Goldman Sachs 10K. I know, very boring, but anyways, so this is old, but I haven't been able to find like recent data with Goldman related to this. Maybe I was just missing it, but anyways, the main point still applies. In 2012, Goldman Sachs, in terms of trading days, they only had 16 days where they actually lost money trading. 16 days they lost money trading. Every single other day, they made money. Like, that is insane. And actually, you can see on 41 days, they made over $100 million. And you can just see how the distribution is right here. You could see there were 16 days where they lost money or like broke even, right? So that is crazy. And I know Goldman Sachs is just a completely different beast, and they're not exactly, it's not exactly an apples to apples comparison to retail trading overall, but it was still their trading revenues. And the question I want to propose is, do you think Goldman Sachs, in order to get results like this, we know that there weren't just like 16 red days in the market, so they clearly had some way to make money when the market was down, or whether it was up, or whether it was flat, or no matter what it was doing, right? So the thing is, Goldman Sachs and these other top tier trading firms are not making money so consistently by just deploying one strategy. What they have are they have a total portfolio, and they have multiple strategies all working at the same time. And yes, sometimes strategies will lose, but when you have a bunch of strategies all together over long periods of time, they should do good, assuming the strategies are good. As an example, what I'm showing you on the screen right now is an example portfolio of what might work pretty consistently. So let's say you're someone who really likes to, let's say day trade, for example. That's fine, but don't let day trading be your only source of making money in the markets. You definitely have to have other streams of income, whether that be, buying and holding stocks, whether that be shorting some put options, which is my personal favorite, whether you have some swing trades sprinkled in, whether you're holding dividend stocks too. So it's you can't just have one strategy working at once, because even if, let's say, you're the best day trader in the world, or you're the best swing trader in the world, or whatever, there will be times when you just can't win. That's just life sometimes. And in order to have true consistency in the markets, where ideally you're making money every day, or basically every day, like Goldman Sachs, you need, not only is it recommended that you need to have multiple strategies working at once, but it's kind of necessary. So keep that in mind. And even if we look at some other trading firms like JP Morgan, this was on their third quarter of 2020. Their trading division had literally no lost days in the third quarter of 2020, and had only 3 lost days in a 9-month period, right? So that's insane. And then even if we look at the most recent quarter for JP Morgan, they had $2.3 billion in net trading revenue just on the stock side of things. So it's not even including the fixed income side of their business either. So it's that's the important thing to know. Like I said, of course, looking at these top tier trading firms and comparing to retail traders is not apples to apples. I understand that. But the main point is what I'm trying to convey. So now I want to go a little bit deeper and how to actually apply this to, normal trading. Basically, here's an example portfolio like I talked about a couple minutes ago. This is something that I like to do. I like to have a nice mix of short put options, day trades, buy and hold stocks, dividend stocks, swing trading. And when you have all of those working at the same time, it's very good than just relying on one strategy. Of course, you can mix this however you want. You might have most of your money in buy and hold stocks, and you might reserve maybe 10% of your total portfolio for day trades, or you can have the mix however you want, and you might not like dividend stocks, so you might do something else instead. There's a lot of ways to spin it, and there's a lot of ways to customize it for your own investing goals. But the main point is that you really need to have multiple strategies working at once, or it will not end well. Yes, you might have some periods of time where things are great, but over the past couple of years especially, we've learned that the market is extremely volatile, and crazy shit happens. It's as simple as that. So you need to have multiple streams of income, or just multiple strategies going in this market if you want to make it over the long term. Now, if you are looking for a good strategy to deploy, check out this video on the screen right now. It goes deep into a really good strategy. It's one of my favorites. Definitely check it out. It's pretty awesome, and maybe it might be a strategy that you deploy for your own total portfolio.